Hi everybody, this is Gary Dean and this is our weekend video report for Sunday, October 23rd, 2016. Hope you guys are having a fantastic weekend. And Friday, they are sticking with the frustrating people that are looking for or holding on for big moves. And we've seen a lot of price action as far as point-wise intraday, but we've been ending right in the same exact spot. So you just have to be quick with you have to recognize this, and it's frustrating for people who don't like to make quick trades, but that's really what it is. If you're holding out for a big swing trade, you're losing time each time because you're seeing the S&P down 15 and closing down 1, then it's down 11 on Friday, closed down 18 cents. So these are the types of things that once you get a big move, take some off and then just put a stop at at your entry. And if it does continue down or in the direction that you have your trade, then you just hold it. But the thing is you have to take some off each time, because otherwise you're just going to be wasting commissions and time, and it gets really frustrating. And when you get frustrated, you get emotional. And when you get emotional, you make dumb trades, and you end up losing money in a market that's going nowhere. And you don't want to do that. So I've said this a few times. There's a time and a place where you get aggressive on either the long side or the short side. There's a time and a place when the market's not going to go anywhere, and it's going to be for reasons probably outside of the market's forces, meaning we have the elections coming up, and I don't believe anybody's going to make any huge bet ahead of that. And until then, we're going to get these big moves up and down, and they're, probably it's just going to be really, really sloppy tape. And that's probably the best way to put this. So looking at a daily chart, you can see we never did a complete reset, but you can see that they've burned off a big part of these, of the overbought conditions, and we, have kind of just gone sideways. So that's not a bearish, view on that, because the price has been holding up, and you can see that the momentum came all the way down, and we're closer to oversold than we are overbought. And again, we're within the where the highs were made. So that's the one piece. The second piece is the actual pattern, which is a bearish rising wedge. We have the bearish divergences, and we broke through it. So that's the bearish case, saying that the S&P should be trading someplace down here if it's going to follow the pattern. So we have a bearish pattern, but we have price action that's actually been fairly bullish because of the the reset of the momentum, and the price has gone nowhere. So it's a little bit dangerous. I think it would be just better for the markets to come down into this level, at least test the moving averages or the 2050 somewhere in here, and then try higher, because right now they don't have that many, say, believers that are willing to chase up here, but we're finding a lot of sellers. So it might be better off if they come down and hold support or something like that, and then come up, because then they're going to get more participation and a bigger slingshot higher if that's the case. So again, the daily chart giving us some mixed signals as far as with the pattern and what has taken place with the technicals. If we look at a 60-minute chart here, you can see now this is almost the opposite of the daily chart, because you can see we were really, really oversold down here, and from there we've headed up, and you can see we've burned off all of the oversold levels, and we're actually closer to overbought. But yet the S&P is not that much higher from where these lows were. So that's a bearish case on the 60-minute chart. It looked like it was going to break through this triangle. What I was showing was on Thursday was that they could be trading within this ascending triangle, and that's a bullish pattern. they might still be able to. It's going to be, not really it wouldn't be a very neat pattern, but you can say that, this was a low here, and then they came down and, made the second low, and now they're going to head higher. That's a chance, but it's, overall, you're changing the dynamics of the pattern, because the S&P should have held here and then headed up and went through it. So right now, it's kind of tough to say what is going to be playing out on this, because, like I said, the momentum and stuff has burned off the oversold levels. And the pattern was bullish, and they broke through it, so they're going to have to work to make it bullish again. And if we take these lows out, the pattern is going to be wiped out again, and you're going to see the bears have all the, they're going to have plenty of gas in the tank to take it lower. So again, what it's just building is we have a mixed picture here, and when you have that, you don't make big bets, and you just take small trades. You get in and out until that changes, and when it changes, then you get more aggressive and you hold for a swing trade. We're just not there right now. So what the bulls have to do, they really have to push it back above this the 2148 level, so about another 7 points higher. What we've known is that if they're going to do that, they're going to do it in a gap up fashion. You can see this gap up here, pretty much another failure, because the gap came from here, it went up, and we were within spitting distance of this low. So anybody that bought from this gap here was they lost out on that. But it's if they're going to do it, they're going to maybe try to gap above it, but they need to get above the 2148. The bears need to push them back, back below this, the 2130, and then really below the 2124. So these are the two support levels that the bulls have built for themselves. Now, if we take them out, this is going to go fairly quickly, because this is going to be the third time we test it down here, and most likely it's going to fail. And from there, we do go to the, somewhere around that 2050 level. But it's, right now, it's just we can't say it's coming right now, because each big drop that we've seen has been bid back up. Every big gap up has been sold off. And like I said, we're ending up in the same spot. So it's not a time to be, getting really, really aggressive with your trades. But again, momentum is approaching the overbought levels, and we're, it's still at the lower end of the price range. So if you take a look at the 15-minute chart, we're yet to do a complete reset of the momentum here, where you can see it's ending right around that 19. We're not getting down to the, to these oversold levels. And it's could they be maybe trading within this bull flag? Possibly. It's tough, because every time they shoot up, we're finding sellers. So nothing, we're kind of neutral on the momentum. We don't have any. We had some bearish divergences, but that move may have already played out. We don't have any bullish divergences, and we're stuck right at, in the middle here. So if they head higher, obviously the bulls need to get it through that 2149. If they do that, then I can see them coming up to the 2159, or possibly even coming up and closing the gap at 2162. This is the first line in the sand for the bears, 2130 to the 2124. If they do that, then it opens the door for a move down to the 2050. So you can see the big move down on Friday that made it right to the 50% retracement level. We also had a pivot here, and from there they were just buying until we closed the day exactly where we started. So that's really about it on that. And if we just take a look at a 5-minute chart, what we want to see if they take it through this 2142, you can see that we have the 78% retracement from this high to this low that's sitting right at the 2144, and then there's a pivot at 2146. So this is going to be your first resistance zone, and if they get through it, then they have price resistance. So, excuse me. So these are really the three levels you want to keep an eye on: 2144, 2146, and 48. if they are going to head down, it should be, it should fail at one of these spots right here. If they get through it and say price accepts that, then we're probably heading up to the 2162. So nothing has really changed from all of last week. The bias of just taking small trades and being quick has been the correct one. It's frustrating, but it is what it is, and that's the stock market. And as long as you know that, you're not going to be surprised, and you just take your small trades and get in and out. And or if you're not into small trades, you just don't trade. You don't do anything and wait until there's some kind of confirmation of a trend. But until then, you're just wasting your time trying to, trade a swing trade that's not there yet. And we have to see some support levels break on the downside, or resistance levels break on the upside. And we really haven't seen that yet. So with that, enjoy the rest of your weekend, and I will talk to you guys tomorrow.